Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production, or recognition of any of the patterns, levels, analysis, or any related items on these, my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
Euro dollar. A combined and immediate countering, key reversal down, bearish open and close black Marabozo, plus a bearish engulfing pattern, if only just, all done yesterday. After the previous session's interesting dragonfly doji pattern. The open was unsurprisingly based on the June 2018 high at 118.51, an interesting level since last week. Prices once again punched down through the June 25 high, which was a little below at 118.29, again with some ease, but this time halted just ahead of the next support, which is the rising green short medium moving average, currently at 117.64. However, prices this time did not turn up, but closed down there, though not too far lower. Further down, we have the October 2021 high at 116.92 and the mauve medium moving average, currently at 116.87. Meanwhile, overhead, some way overhead, is the bright pink neckline extension to the April to May 2020 reverse head and shoulders pattern. It's currently at 120.06. Overall, this market remains within the mid-2025 based bright red shallow bull channel, currently 116.08 to 120.87. This pattern is the main showrunner for this market. Finally, given the very, very lopsided double top pattern in sterling, in cable, sterling against US dollar, I had a fresh look here, and we might just have an even more lopsided double top pattern from mid-January today. Now the key level here would be below 117.64. Now so far today, a small reactionary move back up, but not too far, and not really approaching the June 25 high as yet. Cable, aka sterling against the US dollar. A bearish closing black Marabozo and third bearish black crow yesterday. A further significant drop down through support in a band between 135.55 to 135.16, containing the 2019 high at 135.16, and through the rising green short medium moving average, currently 135.14, but halting at the September 2020 high at 134.83, but this time not reverting all the way back up. We were capped on the top side by the previously highlighted congestion at 135.81. Now prices maintain their stance back within the previously broken and now seemingly repaired very shallow dark blue bear channel dating between early July to early August last year through to late January this year, and that's currently at 129.82 to 136.08. As I said earlier this week, and I quote, "Staying above this dark blue bear channel will now be the single bullish imperative of this market if it is to retain its bullish nature," end of quote. And it looks like the market is now failing the bullish imperative. Additionally, and this may be because I've been staring at an LME 3-month zinc chart for a little too long, but I could see the action since mid-January to date as a very lopsided, eccentric, really eccentric double top. If that is the case, and as I said yesterday, the key level to note is the low 2 weeks ago at 135.06. Yesterday we closed below this, and though I cannot give targets yet, it is only the one single close, I can give potentials. Thus a primary potential will be down in the 134.17 zone, with a secondary hard to reach potential down in the 133 even zone. I can of course extend these lower if we measure from the late January peak instead of the February one, as I've done here. Now so far today, down below the September 2020 high, but then back up again to be capped at the moment by the green short medium moving average and congestion at 136.16. Further down, we next have support at the slowly rising gold long moving average, which is currently at 134.44, and the 2024 high at 134.36. US dollar against the Japanese yen. A bullish closing long white Mariposa yesterday after the previous session's indecisive spinning top. Prices pushed up over the 61.8% Fibonacci line of the 2024 move at 153.40, and at the same time pushed up and out of the very acute late January to mid-February bearish Andrews pitchfork. As I said over the last two sessions, I may finesse this acute bearish Andrews pitchfork into a shallower bearish shift pitchfork for the same move if pressed, especially on any move up towards the overhead mauve medium moving average, which is currently at 155.01. And today I have done just that. You see, yesterday's rally halted right on the mauve medium moving average. We're now between the overhead dark blue upper tine, currently at 156.62, and a dark blue middle tine, currently at 153.20, of the new bearish shift pitchfork, dark blue bearish shift pitchfork. Next overhead, we have the June 1990 high at 155.78, with a flatlining green short medium moving average, currently 156 even, just beyond that. Overall, we remain within the previously breached but seemingly repaired bright red April to November 2025 bull channel, currently 151.32 to 158.18. Finally, continuing the theme of a very lopsided double top in sterling against the US dollar, and even more lopsided double top in euro against the US dollar, we might have here a very nascent double bottom. The key level would be a significant move up over 157.72, and that's something to bear in mind. So far today, well, a move higher over the mauve medium moving average, but then back down again and looking like an indecisive doji cross right now. US dollar against the CNH, the offshore Chinese yuan. A bullish white soldier yesterday after the previous session's indecisive doji cross. We continue to be back down within, if only just this time, the originally and previously broken December 2025 to date bear channel, which is currently 684.30 to 688.87. I suppose in some ways we really never left it when we broke higher in late January. Yesterday was a bracketing action with the market moving in between the recent low, that's below at 687.94, and capped by the May 23 low at 689.53. Further below we have the 50% Fibonacci line of the February 22 to April 25 move at 686.60, with further congestion at 685.58. Both of these are within the bear channel right now. Looking overhead, well, we have the interesting bright red extension to the upper trend line, which is currently at 693.29 of the May to August 2022 ascending triangle. Now, so far today, a move up over the May 23 low and out of that channel again, but not by much so far. US dollar against the Brazilian real. Well, Carnival is over and the market made a key reversal up, but also a higher indecisive spinning top pattern yesterday. It was a continuation in many ways from the reactionary jump up seen in the previous sessions from the 50% Fibonacci line of the October 2019 to December 2024 move at 513.82. But the rise was capped, this time on a closing basis, by the 61.8% Fibonacci line of the April 22 to December 24 move at 524.07. Importantly, the market closed over the declining dark blue middle time, which is currently at 522.21, and that's of the important mid-December 24 to mid-April 25 bearish shift pitchfork. This bearish shift pitchfork is still the showrunner here for this market. US dollar against the Mexican peso. An immediate countering key reversal up yesterday after the previous session's interesting combined key reversal down and bearish engulfing pattern. The market closed back up and within, if only just, the breached November 25 to date based bear channel, which is currently at 17.14.05 to 17.59.11. It's not too well defined bear channel, it's not a too well defined bear channel, but it's still there and has been the showrunner here since late last year. However, In the attempts lower in January and February, prices found it tough testing the March and April 2016 lows at 1709.23 and 1703.89 respectively, as it did yesterday. And we've seen the reactionary move up because of that. And this hasn't stopped the market forming a possible bearish cat's ears pattern over late January and February, though so far the pattern has not been triggered on the downside, though even it is still fairly close still at the moment. I suspect this hesitancy may be due to the influence of the nearby bright red neckline extension below to the January to May 2021 head and shoulders top, which is currently at 1681.34. This, apart from the 2023 low at 1661.94, is all that stands in the way before the significant congestion zone between 1646.25 to 1625.52. Overhead, we now have the July 2017 low at 1743.74 and a whole mess of congestion between 1756.93 to 1766.16. 1756.93 to 1766.16. Finally, I highlight once again the bright green April to November 2025 bearish shift pitch hawk to help show the bearish angle of attack of this market. We are today just above the middle time, which is currently at 1705.78. Now, so far today, I've been capped by the dark blue bear channel and held up by the bright green middle sign. Well, we're actually now being held up by the dark blue lower channel line, but we're not really pushing any further higher.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.